Good morning, good afternoon, good day. Welcome to my weekend market roundup, 17th July 2021. I am about 10 minutes late in starting the webinar. I was having some issues with my computer. Sorry about that. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. All these are open to the public. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use for my trading. They run on underlying TradeStation and Metastock platforms. That was the last slide of the presentation. Let's continue with the live system. Let's have a look at the global markets quickly, starting with Australian index AXJO. The backdrop color remained bearish in the weekly chart for 4 weeks in a row. Daily is showing that it is moving sideways. We'll avoid taking any directional trade at present. Let me switch to the two chart template for the global markets. Let's look at topics. I switch to two chart weekly daily template for the global markets. Looking at topics, Japanese index continuing to move inside triangle pattern in both weekly and daily. We'll avoid taking directional trades at present. CSI 300. This is also continuing to move inside a range bound by trendline support and trendline resistance. FTSE index also moving inside a range in a triangle pattern in daily, inside a narrow range in weekly. And lastly, India's Nifty 50 moving inside a range in weekly, daily again. All the global markets are moving inside a range. What about the USA market? For that, let's look at the market ETFs, and this time I am using Q Elite on TradeStation. For USA market, let me use the 3 chart template. Most of us are trading in the USA market. It will be good to have a look at the alternative signals also for the USA market. The weekly now has a bearish headwind. Backdrop color is bearish. There is a trend line support, but some distance away. That distance is shown in the daily chart, far enough away for a swing short trade. Daily also displayed a bearish headwind. That candle shape was bearish. At the same time, there was a bear release signal. We wouldn't take a short trade at that time, not using daily chart, because there was a trend line support. On Friday, that trend line support was broken with a bearish flow. That is reason enough to be cautious if you are holding long position in SPY. And you could be alert ahead of the breakdown by looking at the bearish headwinds that appear. In the alternative chart, now Bongo is red and we have a Mobo breakout, or you may say red color, so Mobo breakdown. In the Q chart, we also have a reversal candle at price extreme high with high volume. That is also an alert signal. Whenever we see reversal at price extreme high, we are cautious. If we see red candle high, then also we are cautious. We had two red candle high in a row a couple of days ago. I think on these 2 days. Incidentally, the first red candle high coincided with the bearish headwind in the daily chart. The calculations are very much different, of course. And when different calculations point to possible reversal, in fact, we had three reversal signals on the same day. We had the bear release, bearish headwind, and red candle high using entirely different calculations. That would be a reason to be cautious. Again, we wouldn't short at that time because of the trend line support, which was broken on Friday. And notice the reversal candle. You will see the reversal candle, the increased down volume was there in multiple market ETFs. QQQ also displayed bearish headwind in daily, multiple indecision at the top, cluster of them, a bear release signal. On Friday, bearish flow, break below trend line support, high volume down days, 2 in a row. If you look back, that didn't come for a long time. The last time that happened was here. Multiple down days in a row, high volume down days. And now we have multiple or two high volume down days in a row. In the alternate signals for QQQ, we have the biggest down move in 1 month. That is also a significant indication. We may keep that in mind. The biggest down move in a month. And we also have a pocket pivot bearish and a Mobo breakout bearish. Bongo turned red. There are enough signals to be cautious in QQQ also. Of course, both are continuing to be in an uptrend. Dia, bearish headwind in weekly, bearish headwind in weekly at the same level. In the daily again, bearish flow, bearish shape on Friday, close just above the trend line support, reversal candle at price extreme high, high down volume day. In the alternate signals, pocket pivot, red candle high. Dia is also in an uptrend but showing enough number of weakness in Q and the alternate daily chart. Enough weakness signals to be cautious, but it is in an uptrend, which is different for IWM. IWM was moving sideways for a while, displayed the bearish headwind at this point, couldn't go much above that. Right on this day, I mentioned in live session that I was not going to buy IWM, and later on this day, again in live session, I mentioned there was a go with flow short setup using the unambiguous checklist. One could take an aggressive entry right at the top when it was at trendline resistance and displayed the indecision at the top, One could take a short trade in the first bearish flow candle, or one could take the first proper go with flow short trade that I shared in the last webinar. That was Wednesday pre-market. Then Wednesday, Thursday, Friday price drop. It closed below the trend line support. I took a short trade based on the go with flow signal, and I had already booked profit when it hit the trend line support. I don't remember whether I waited for the trend line support or I booked profit probably at the lower boundary itself. I think I booked profit at the lower boundary itself. I had a sizable short position in IWM. I didn't want to wait. When it hit the lower boundary, I booked my profit. On Friday, it broke below the daily trend line support, closed right at the weekly trend line support. Relative performance is showing that it is pretty weak. This has maximum down days in a row, 4 down days in a row. That shows the weakness, and this was the only tape that showed the go with flow short setup. So it was already in a downtrend for short-term trading purposes. I mentioned about the weakness of IWM on this point, and also with a go with flow short setup. Those worked well. And for Dia also, I remember when price came here, we had the bearish headwind at the watermark resistance in daily. The watermark resistance was also there in weekly. I mentioned that if anything, I was going to short it. If we are shorting at the top without any Q trade setup, then one way to do it without any Q trade setup but with enough weakness signals, one way to trade it more effectively is to use verticals. Then we don't have to put any stop loss. And if someone traded it with short call vertical, that would have given a sizable profit by Friday. I didn't take that trade. I had the IWM trade and I closed that with a profit. If we look at the USA market ETFs, they are still in an uptrend except IWM, which is moving sideways and just broke below the lower support of the sideways range in the daily chart. That may show further weakness in the coming weeks. That is different from the global markets. Global markets are moving sideways. USA market is mostly still in an uptrend. Now that uptrend may be misleading. The market ETFs are holding up quite well, though last couple of days showing some weakness. But generally the market ETFs were holding up quite strongly, which is very different from what was happening to individual stocks. For example, LPX, and I came here for a reason. I first mentioned about LPX when the bearish headwind came, and at that time there was a trend line support. I mentioned if the trend line support was broken, we could be cautious. LPX was one of the high flyers at that time. And see what happened from there. After the trend line breakdown at this point, it has continued to go down. We had a go with flow short setup on this day that hit the profit target easily. Actually, the risk distance was covered probably on this day itself, hit the lower boundary later. Then we had another go with flow short setup on this day that also hit the profit target by Friday's close. I am not looking at this flow candle, bearish flow, and thinking it was a go with flow short setup because the risk reward would not be attractive. It was already too close to the lower boundary. So I didn't consider that as a go with flow short setup day. However, this day that would be Wednesday pre-market, Tuesday's market close when we had the last market webinar. I don't know if I mentioned this. LPX gave a go with flow short setup again and that hit the profit target. Now this stock is starting to look very weak. The downtrend started from here itself. Lower high, lower high, lower low, you may say. So though the market ETF is holding strong, the earlier high flyer LPX was already coming down for a long time. And this pattern we will find in many stocks. Another stock which I traded and I shared publicly before knowing the result, that was OXY. Energy sector stock. Energy was very strong as a sector. However, this stock started to come down and right on this day, it had a breakdown plus a go with flow short setup. At that time, there was a trend line support also that was broken. So I discussed it right on that day. I think I shared it on the forum. Let's have a look. It's useful to look at the exact snapshots that I shared. When I shared the idea before knowing the result, it was 3 days ago. OXY. This is a nice looking bearish breakout setup. 3 days ago I shared it, July 14th, just before market close, 3:40 p.m. These were the snapshots. Integrated oil and gas. It weakened sharply from a score of 141 to a score of 5 that showed up as the second most decelerating industry. So if we were doing a top-down analysis, you could look for the weakest industries based on score or acceleration, find integrated oil and gas, and drill down to look for weak stocks to short. I did that and I found OXY, overvalued stock. In itself, 100% of the peer stocks were down for OXY. The stock itself was down by more than 7.7%. Fundamentals allowed me to short. Seasonality was not very bearish, but it was bearish in July. This red color shows it was bearish. Not very bearish though. And the chart was giving a very clear breakdown setup both in weekly and daily with a bearish flow as well, bearish pressure, and a reversal candle at pendulum high. Remember, I always take into account these two signals coming together. I am extra cautious. Reversal at pendulum high, and they are showing in several market ETFs now. In any case, OXY gave a breakdown and go with flow short setup on that day, and it also had biggest down move in 1 month. Which market ETF has that now? QQQ has the biggest down move in 1 month, and it had a kahuna as well. Enough signals to take a short trade using 360 degrees analysis, and I took a short trade. I, in this case, used a combination of verticals and naked puts. It was at pendulum high with reversal candle, so I took some naked puts and I also took some verticals. On Friday, as it hit the trend line support in daily, the weekly is showing clear weakness, breaking below the trendline support heavily. However, my risk distance is covered. I took the trade not at the exact close, maybe somewhat before the close. I had a good profit in the trade. I booked profit in the naked put options, and I'm holding on to the verticals. If the stock reverses, puts will would have lost profit quickly. That's why I exited the naked puts, but I'm holding on to the put vertical, long put vertical bearish trade. Again, this stock, just like LPX, is looking much weaker than what SPY, DIA, QQQ are looking like. Let's look at another stock I shared earlier. That was AMRC. And why did I share it? That day I was discussing about red candle high. It was this day. It displayed a red candle high on this bar. At the same time, in the Q chart, it displayed indecision at the top, a false upside breakout at the watermark resistance, at which level series of bearish headwinds came earlier. The weekly had series of indecision at the top, cluster of indecision at the top. And I remember I mentioned in that session, looking at many stocks displaying red candle high, that this is a stock I wouldn't mind shorting. And that was very useful. Price came down from here, hit the trend line support on Thursday as well as Friday. If you took the short trade based on this day's analysis, that was again Wednesday pre-market. So Tuesday's market close, Wednesday, Thursday, Friday it came down, and you could book profit at the trend line support. For short-term trading, I always like to book at least partial profit when the stock comes down to a trend line support. In this case, the false upside breakout at a level where bearish headwinds came earlier was effective enough signal to take a short trade. And remember how I found the trade? I found it while looking for stocks that displayed red candle high. Let's look at Facebook. I think I shared an idea on Facebook. And as you may guess, I have a position in Facebook. This will once again show how I am comfortable shorting apparently very fundamental stocks right at the or near the very top. Did I share it here? October. This one. Will you consider shorting this mega cap? Shared 2 days ago, July 15th, morning session, 10:51 a.m. And when I am sharing it in the morning session, most likely I am looking at it also using the intraday chart and probably taking a trade early in the day. Let's look at the Q analysis. The more you go through these analysis, either when I do these videos or look at the tweets or look at the forum posts, you will see how an experienced trader, at least Q experienced trader, is applying the system and technique in real life using live market, always sharing before knowing the result. I always share before knowing the result. Facebook's industry online services was very strong earlier. It weakened significantly and deceleration was even more weak. That allowed me to short in the industry. Now, I mentioned that Facebook was not fundamentally weak. Certainly not a weak fundamental stock. However, it was gradually coming down. In itself, also, The industry was weak. 57% of peer stocks were down. As I have mentioned many times, if I am trying to short a stock at the top, I may ignore the fundamentals. Fundamentals may change afterwards, but I am ahead of that, and usually these trades work very well, at least the way I choose them, select them, identify them. This is what I saw on the charts. Bearish headwind in the weekly 1 week ago, bear release that week, bearish backdrop and bearish shape in the weekly. In the daily, it was moving sideways for a while. One day before, the flow color turned bearish. However, it was just above the trend line support. Just when it was breaking below the trend line support, using fine-tune chart, I shorted it. In the alternate signal, Bongo turned red. PSAR also turned red. It was still at price extreme high. It was inside a Q squeeze as well. This was the chart when I shared it, and notice the bearish headwind. I pointed to the bearish headwind in multiple market ETFs. Here also I use the bearish headwind, and remember I use the bearish headwind in LPX also to trying to identify the top. Let's look at Facebook. After that, let's look at it as of today. I shared it 2 days ago, right? Let's look at Facebook today. I shared the idea on this day. Yesterday it fell further. The week also closed lower. I am continuing to hold a bearish position in Facebook. This time I used long put vertical. If it comes down to the trend line support, I will book at least partial profit. Another example where I was bold enough based on the signals, not crazy enough, but bold enough based on the signals to short a mega cap at the top. And that was not the only mega cap that I shared with a bearish view in recent days. Amazon was one of the others. And that also worked beautifully. Amazon had a indecision at the top signal, then a bearish headwind, then again one more indecision at the top, so a cluster of indecision at the top, and a bear release, and a reversal signal at pendulum high. That was the day. That was Tuesday's close, Wednesday's pre-market session. Right on that day, I shared my bearish view on Amazon. It was clearly in an uptrend. And that is the value of the headwind reversal signal. That's why it's called a possible reversal signal, not a trend following signal by any means. I use the headwind signal and a few other signals quite a lot actually. Indecision cluster at the top, bear release, and also reversal at price extreme high to short Amazon at that time. And I mentioned in the previous webinar, I shorted it with naked put. That was bold. The choice of instrument was bold. The trade was not crazy. Choice of instrument was bold for my account because Amazon is a very expensive stock. Even the put options are expensive. I remember I paid about $140 for each share, so about $14,000 for one lot, and that was a bit too much for one lot to pay for my account. So when it came down little bit, I was keeping an eye on intraday chart. I exited. If my risk tolerance was higher, I would have continued to hold it, but that is fine. I took the trade using intraday chart, so my risk was very low. I exited with a profit that was greater than the risk. That is always my aim, to try to exit a trade, at least partial position, once the risk distance was covered. And Amazon is an expensive stock. I booked profit. Those with bigger account size, and probably all of you have much bigger account sizes, they could, if they could analyze it the way I could, and they could take the short using fine-tuned chart the way I did, they could exit probably partial position at the trend line support and continue to hold the remaining position. Now you see all these ideas that I share using live market, whether it is Amazon or LPX or other stocks, the bearish headwind comes very handy. It is an unusual signal reversal that comes at the top, so some of you may need some getting used to. Observe it for a while before you start to use it in real life. This is still remaining in an uptrend, but I could catch the very top on the day it created. In fact, I remember on that day it created on intraday basis a new all-time high, and I could short it right on that day or using that day signal. Now let's look at Apple as of today. I did a day trade using Apple. I have exited it. Here also the bearish headwind came one day earlier, Thursday. Thursday in fact created a new all-time high on an intraday basis. Then it pulled back, but the candle shape was indecisive. Then on Friday I was keeping an eye on Apple. I took a intraday trade. There was no headwind short setup because the weekly didn't meet the checklist conditions, and it did not come down below the watermark resistance in weekly. If it came down, then I would be more comfortable to take a swing trade and hold on to it, but I didn't have that false reversal across the watermark resistance, so I took an intraday trade in Apple, again using the bearish headwind that came one day earlier, similar to Amazon, and then the price coming down on intraday chart yesterday. Let's look at the intraday chart yesterday. In the morning session I use 5-minute chart. Sorry, I was mute for a while. Since when, I don't know. Let's look at Apple again. Oh, that's bad. Sometimes I take a sip of water and I put myself on mute, and as you might have noticed, I forget to switch on the sound. Very, very sorry about that. I hope I covered Amazon. Not sure, but let's look at Apple. Apple had a bearish headwind on Thursday. It was at the very high. I was ready to short it on Friday using intraday chart. Intraday fine-tune chart, 5-minute interval in the morning session. Price opened here, blue pivot. Then the early range high, early range low formed. I was going to only short it because it displayed bearish headwind. One could short it on this candle or the next bearish flow candle. In either case, top would be above the early range high. So I shorted it somewhere here, and as price came down to here or here, one of the places, I exited the intraday trade. I initiated the trade using the bearish headwind in the daily, and I used the fine-tune chart to have a profitable intraday trade in Apple. If we want to look at the other mega caps, let's look at Netflix. Netflix also displayed, just like Apple, a bearish headwind on Thursday. Price was starting to come back below the trend line resistance in weekly. Once again, just like I traded Apple, you could also take a trade in Netflix using intraday fine tune chart. I did not take it, so I don't know whether there was a low risk entry point. Let's look at the intraday chart. Yes, indeed there was. Early range low, early range high. We had a bearish headwind one day earlier. Mega caps were starting to show some weakness. So we were going to only look for short trade, at least I was going to. And right at this point, you could short Netflix, put stop above early range high. Stop was not hit. By the time price came to the pause level, intraday pivot risk distance was covered, you could exit at least partial position. Again, one trade where you could use the bearish headwind effectively to take an intraday short trade. How is the ARC doing? ARC had a rally in this period and then it started to pull back. On this day, it had a go with flow short setup on the daily chart. If you took that, risk distance was easily covered by Friday and profit could be booked. What about FFTY? This is doing much worse. It was inside a triangle pattern in weekly for a very long time, and this week it closed decisively below that triangle pattern. Why I am going through these instruments is to further corroborate the statement I made earlier that though SPY, QQQ, DIA were making new all-time highs or coming close to making new all-time highs, that would falsely show the market strength in recent days because many stocks, individual stocks, were starting to drop much earlier, and even some ETFs like FFTY, ARC, they were not going up, at all. That they were showing the weakness, and that weakness, of course, was visible from the 1 month to 1 day sector, industry, stock, advanced decline breadth, and this I am showing in many webinars, many webinars. The 1 day, 2 day period, they were flip-flopping between red and green, and I was showing that while that was happening, the red colors were spreading towards the longer intervals, and now you can see 1 day to 1 month everything is decisively bearish. And this is the first weekend webinar where I am sharing this, that all the periods are decisively bearish, but the market ETFs, especially SPY, DIA, QQQ, are still in an uptrend. That shows that under the hood a lot of selling has already taken place. Imagine what will happen if SPY, QQQ also starts to be in downtrend. What will happen to these stocks? Will they reverse kind of rotation from big cap to small cap? I doubt it. Of course, I will trade based on what I see. But looking at the weakness of IWM, the fact that it broke below trend line support, I'll guess that if SPY, QQQ starts to form a downtrend now, the average stocks will drop even further. This sector, industry, stock advance decline alerted to that for many weeks. And the same alert was there in market breadth studies. We'll look at that. At the same time, there is no heavy selling yet. I'll show that. No heavy selling yet, no distribution count. Now if we see the bucket analysis, the percentage of stocks in the lowest bucket, less than 1, it jumped by a huge percentage on Friday. Not only the sector industry stock showed the weakness was very severe. More than 18, almost 19% of the S&P 1500 stocks went below their lower Bollinger Band. Are they becoming oversold? If this percentage becomes 30%, 40% or that level, then we may expect at least a temporary pull up. But we are not there yet. It may go further. The weakness may continue. And as I mentioned, if SPY QQQ starts to come down, I think this weakness will be more severe before it starts to recover. If we see the percentage of stocks above mid Bollinger Band, that was 35% on Thursday, became 29%. So not only the stocks that were near lower Bollinger Band crossed below lower Bollinger Band, but also stocks that were near mid Bollinger Band crossed below the mid Bollinger Band. So about 6% drop there. That is showing weakness, and the weakness is starting to become severe enough to expect a move up, but not yet. Now let's look at the technical breadth first. In the last webinar, I think it was already showing weakness, and see the weakness now. The balance between bearish and bullish technical signals in Q Finder. Very useful chart. One gentleman asked me, when do I use Q Sonar and when do I use Q Finder? One thing to note, I every day run Q Finder, every day. If nothing else, for 3 reasons. And three of them are actually quite useful. One is this technical breadth insight. There is no other way we could visualize the technical breadth and the balance between the continuation signals, reversal signals, strength signals for the weekly interval, daily interval. That is one reason why I always run Q Finder every day. Another reason is, based on the breadth, if I decide to look for bearish trades, I can do a multidimensional analysis much more easily than I can do using radar on TradeStation or Sonar for QLE. Radar also has a limitation on the number of stocks that I can handle, and in Finder I have no limit. I can easily run it on thousands of stocks, and I can do multidimensional analysis. Like now I am on the bearish tab daily. I may look for breakouts with pressure. Large number of stocks went down by huge percentage yesterday. The third reason is I can now look for the alternate signals, the HSI like signals for these stocks now. For example, I could look for stocks that are having bearish kahuna in a squeeze with mobile breakout. These are the 3 reasons. One is I can have a look at the overall technical breadth. Second, I can do a multidimensional analysis very easily across many signals. And thirdly, I could cross-reference those identified Q setups or Q signals with alternate HSA like signals and further narrow my list. So I run it every day. On the other hand, when I am just focusing on a relatively small list of stocks, let's say stocks with liquid options, that is a small enough list. In that case, I may simply drop it into radar or sonar and find out the signals from there. But that will not show me the technical breadth, and also not easy to do multidimensional analysis as I can do on Finder. So I do run both. For smaller list, I use radar first or sonar first, and for bigger list, there is no way to use radar in any case. I use QFinder. Back to the weekly. Weekly is clearly bearish, very bearish. Maybe it is coming to a point where reversal is possible. 87% of all signals bearish, 82% of strength signals, 89 of trend continuation, and 85% of reversal. Very, very bearish. You can also see the relative size of the total bearish and bullish signals. Weekly is very bearish, and if we see Friday's breadth, strength is only bullish because of large number of gap ups. Now see here, there were large number of gap ups, but the number of reversals is much more than the number of gap ups. And as I mentioned earlier, when you combine that strength bullish with reversal bearish, overall that becomes bearish. Again, daily interval, if you see, the number of bullish signals, bearish signals is much more than the total number of bullish signals. So Friday was also a very weak day. Interestingly, look at these two charts. Remember earlier I showed that when the percentage of stocks giving bullish signals, they were mainly at price extreme high, the green area. That was at one point in recent days, it was around 60%, and I mentioned technically it was becoming overbought. And now market has pulled down. These are very useful insights, not available from TradeStation or Sonar. So I used for that reason also. Why I pointed out to this percentage, it was about 60%. Now it came down to 39%. So it is not overall market technical overbought anymore, because most of the bullish signals are coming from mid level. That is healthy. It's not bullish, but it is not overbought. Now look at the percentage of bearish signals coming from price extreme low. It's actually very small, only 6%. Majority of the bearish signals are coming from price extreme middle. So it is nowhere near being technically oversold. The technically overbought condition that we saw in the daily interval, and I think we saw in the weekly interval also, overbought technical breadth for the whole market, that has played out. Market has come down. Is it oversold? Clearly no. Just 6% of the bearish signals are coming from price extreme low. So we have a long way to go from this angle also before we say that technical breadth is oversold, which will be when most of the bearish signals, at least 50% or more, will be from the red area, the pendulum low area. We are far away from that. We saw from bucket analysis also, percentage of stocks in the lowest bracket, it jumped, but it is still some distance away from being oversold, and we have a similar conclusion from an entirely different angle, technical breadth angle. It is not oversold yet, far from that. And even in the weekly interval, the oversold condition is far. So we have a long distance to go before technical breadth become oversold. We can expect market to drop, especially if SPY QQQ dia shows further weakness in the coming week. Now let's look at the market breadth. Interestingly, though we are seeing weakness from Q edge, sector, industry, stock breadth, seeing that from technical breadth, seeing that from Bucket analysis, those doesn't show whether there is heavy selling or not. That comes that is shown visually from market breadth. But before seeing that, let's look at the mega caps. Mega cap top 20 still in an uptrend. When it is near the upper boundary, I don't like to buy. It has come down on Wednesday, Thursday, Friday. Thursday, Friday, traffic light turned red. Friday, we have bearish flow. Remember, those are the 2 days when I started shorting the mega caps using intraday charts, and I could again pick the very top. It is still in an uptrend. It has a trend line support nearby. Actually, many of them, it will not be easy. Usually, it is not easy for price to break through all of them in one go. And you probably know that if you are watching the Q charts regularly. Now let's look at market breadth. Have a look at the composites first. Nasdaq and NYSE composite. The most sensitive plot here, the MA plots, is the above 50 moving average. For Nasdaq, it was already coming down for a number of weeks, almost 6-7 weeks. Came below average line also here, though QQQ was going up, and I kept on mentioning this weakness is continuing to remain weak both for Nasdaq and NYSE. Nasdaq, the percentage of stocks above 50 MA is only at 30% now. For NYSE, percentage of stocks above 50 MA is slightly better, around 40%. So Nasdaq is continuing to remain weak. Now, one other interesting thing is the white line. The percentage of stocks above 200 MA is also starting to roll over. That is slower than the yellow line is starting to roll over, and we'll see that more clearly in the total view. Interestingly, there is no distribution day. That would show as down arrow. There is no down arrow in the recent days. Now, remember this day. Right on that day, that was an accumulation day. In fact, it had an accumulation count of 5, and it had an eureka in NYSE. Let's look at the total breadth. This combines the insight from the two composites, NYSE, Nasdaq, and the 4 major indices. On this day, we had an eureka day, and we had an accumulation count of 5. Right on that day, I mentioned, and the count is shown here also. Right on that day, I mentioned that eureka and such heavy accumulation at the top may be a sign of irrational exuberance, and that caution was useful. Now price has come down, not much, but it has come down. It may lead to further down move, but again, for the total view, there is no distribution count. That is tempering my expectation of a sharp market drop. Many stocks are coming down for several weeks. QH sector industry stock advanced decline shows that. Technical breadth shows that also. However, no selling with very high volume. Will it come? If it comes, then there is very much more reason to be cautious. Now, one interesting thing here, I wanted to show the yellow line for the total breadth was already coming down for many weeks now. Now see the white line also. It has visibly tilted down for last couple of days. That means, in fact, interestingly, right after this Eureka Day and 5 accumulation day, the white line started to tilt down visibly, showing that stocks are now starting to roll below their 200-day moving average as well. They were already below their starting to go below their 50-day moving average, and now we can see right after the high accumulation Eureka day they are starting to roll below 200-day moving average also. Many signs of weakness. In this market there is reason to be extra cautious, which I am saying for quite a many webinars, before buying stocks. I have one person who trades not based on Q systems, but he was sharing with me some stocks like STX, and he was mentioning he wanted to buy the stock. Now, obviously, he is not using Q charts. If he was using, he would know that it was coming down, had trend line resistance, had trend line support that broke on Friday. Price is right at trend line support in weekly, but weekly has a bearish backdrop, also a reversal candle. In the alternate signals, we have two kahuna in a row. On Thursday, we had Mobo breakout from a squeeze with kahuna, and on Friday, again, is kahuna in a squeeze. Those are bearish signals. No point trying to buy STX, in my view, however strong it may be fundamentally. If we use the charts, the simple visual signals, we can figure out whether we should buy it or not. And when I tried to look at stocks to buy on Friday, I shared a post on the forum that was using, you could find those stocks using top-down and bottom-up analysis both. I have 5 more minutes before I reach the 1 hour point. Let's try to look at that, how I or you could identify the stocks. On Friday, yesterday, only one sector was up. Which one was that? That was utilities. In fact, I wanted to show you some graphs, point to some graphs. Of course, yesterday only utilities was up. One sector was up, all others were down. They were down by significant percentages. Utilities was up by 0.8%. That was Friday. Friday, one up 0.8% utilities. Over 2-day period also, only one sector was up. That was utilities again, 1.9%. Over 1 day, 2 day, only one sector up. Now let's look at broader period. Over 5 days, only one sector up, again utilities. Over 10 days, 2 are up. One is utilities, real estate by a smaller percentage. Over 1 month, only one sector is up, that is utilities. So from 1 month to 1 day, only one sector is consistently up, that is utilities. But how was utilities earlier? It was one of the weakest, and now we will look at that using the rotation table. Look at utilities. It used to be the weakest for a long time, started to improve, and now it has become the best performer over many periods. We could start to buy some time ago also, and now some of the stocks may be already in an uptrend. At the bottom they would be breakout from pendulum low or bullish headwind reversal setup or box setup at double bottom, triple bottom, and now we may find some trend following setup, go with flow or pullback setup, or even breakout setup. Utilities is the strongest, whether you look at 1 month to 1 day. So let's look at the utilities industries. Let's look at the strongest one. Let's look at the top 3. Water utilities, electric utilities, multi-utilities. You could take gas utilities also. Let's take gas utilities also. I'm not taking the last one, independent power producers, energy traders. That is still relatively weak. Now I'm going to drill down into the underlying stocks, but I don't want to drill down to S&P 1500 only. So let's go to Q Vital, look at all the mid and high price stocks, calculate a scorecard for that. That is my usual trading universe. Maybe more the mid price stocks than the high price stocks, but in any case, not the low price stocks. They may be too volatile, too speculative. So let's calculate a scorecard here on Q Vital on my trading universe, all liquid stocks excluding low price speculative stocks, and now go to Q Edge. For those industries, I'm going to look up liquid stocks by clicking the orange button. If I click the blue button, I would go to underlying stocks only in S&P 1500, and using the orange button, I'm going to now Q Vital, looking at the underlying stocks in my trading universe. Now let's look at crown jewels. We have energy SPH. If they didn't give any technical trade setup, then I would change to 3-star, then I would find EIX, energy, etc. And I am also okay to go to 1-star, that is either undervalued or earnings growth. And there you would find stocks like DTE, ETR, FE. Those are the stocks that I share. They are in the strongest sector, in the strongest industries in that sector, and with enough fundamental reason to buy. And let's look at those charts. I shared it in a forum, but let's look at the charts. I don't have the stocks listed here. Let's look at the stocks then from the forum. Here are 4 stocks to consider buying in today's strongest sector, utilities. They were FE, DTE, EIX, ETR. Now for one of them, I mentioned that it had trendline resistance, and I suggested considering buying only if the trendline resistance was cleared, which it didn't. So let's look at these 4 stocks: FE, DTE, EIX, ETR. FE, DTE, EIX, ETR. Yes, I think EIX was the one that had trendline resistance. Yes, both in daily and weekly. Intraday it went up. If it broke above the daily trend line, at which point it would have broken above the weekly trend line also, it would have given a very nice breakout setup, but that didn't happen. And I mentioned that as per Q guideline, we are not going to buy a stock just ahead of a trendline resistance, and this trendline resistance serves us very well, you know already. So EIX we wouldn't buy, of course, on Friday, not based on technicals. Let's look at the others. Let's look at ETR. Let's look at it on Sonar also. ETR, not here. ETR, DTE, and FE. Let's look at the signals that came by the close of the day. 2 of them had go with flow setup, DTE in FE. One had pullback setup, ETR, and FE had a breakout also. Let's look at ETR first. Not a clear pullback. Pullback in the sense it recovered the yellow direction line, but it went below that significantly. But the weekly was showing support from these long lower tail candles. Thursday was a strong day, and Friday was strong. When I shared it at the close of the day, it had an upper tail. still closed with a kahuna in a squeeze, had a Mobo breakout one day earlier. If it closed without the upper tail, I would consider buying. That would be the Q approach. If it had an upper tail, which it had, then the approach would be to keep an eye on the stock. On Monday, if it continues to go up, one may buy using intraday chart. Once again, notice how the bearish headwind both in daily and weekly could catch the very bottom. Remember the same headwind, but at the top I used to short several stocks successfully, and you could use the same headwind for buying also at the bottom. So I looked for a pullback setup, but looking at the, if you didn't trade it somewhere at the lower half using fine-tuned chart, intraday chart, you don't buy it at the close of the day, not using Q guideline. But you may keep an eye on this. By the way, several of these stocks pay a decent dividend also, 4% or more. Several, not all of them. I think one may be paying less than 4, but others are paying 4% or more. That may also be reason to buy the stock, because many of us probably have cash in hand. We are not fully invested in the market. Instead of keeping it in cash, one may consider buying some high dividend paying stable companies. Utilities are usually stable companies. So you could distribute some cash into multiple utilities. Let's look at the other two stocks. That was ETR. Let's look at FE. Now FE, I will look at it last because it has multiple signals. Let's look at DTE. This is looking better. I always like to buy stocks that are having support in weekly, daily both. Even better if they are breaking out of trendline resistance. Was there a breakout from trendline resistance? Let's check out from the template that shows the historical trend lines. Yes, this is what I like, and they work very well. Weekly trend line support, daily trend line support, going up from support and breaking trend line resistance. One could buy it right at the point of breakout. I didn't at that time. Then it moved sideways, and Friday it gave a bullish flow. In a way, you may say, if we look at weekly, daily again, weekly bullish, going up from trendline support, bullish backdrop, bullish shape. Daily went up, you may say came down little bit. The yellow direction line held, and now we have a bullish flow. In a way, you may say it is a trend following wave flow long setup. Relative performance is strong. In the alternate signals, we have bongo green, and there was on Thursday a pocket pivot and Mobo breakout. Incidentally, right near the bottom here, when multiple indecision at the bottom signals came, I explained in one recent webinar how to use the cluster of indecision at the bottom or top, in this case bottom, which was also showing up in the weekly chart. Interestingly, that was the same point when we had 2 days of biggest up move of 1 month. So you could start to look to buy from that time itself. Biggest up move in 1 month with cluster of indecision. I didn't do that, but I did take a long position in DTE on Friday. And because I did it, let's check out its fundamentals now in more detail. We know the industry is one of the strongest, sector is the strongest. So we just need to check the scorecard again. Scorecard is looking quite good, isn't it? Medium valuation, great earnings growth, increasing revenue growth for 3 quarters. We can see earnings growth is also accelerating. Sorry, here revenue growth. Earnings growth came down, but it accelerated in the last quarter. It has robust, steady revenue and earnings growth. Anyway, its utilities revenue will be steady. Revenue growth is improving. Earnings growth improved in the last quarter. Steadily going up. Here it has less than 4. I mentioned some of them had less than 4. 2.8% dividend yield. And the industry itself was very strong. 73% of stocks went up on Friday, which was a very down day otherwise in all other sectors. So I had a long position. I took a long position on Friday in DTE. And lastly, before ending today's session, let's look at FE. FE had a breakout as well as a possible go with flow trend following long setup. It had a breakout. However, by the close of the day, it had an upper tail. If you took the breakout trade early in the day, then you could continue to hold on to the trade. It's a breakout trade. If it closed without the upper tail, then it could be taken at the close of the day also. The weekly showing that it is moving sideways at trend line support. Has high volume up day on Friday and the alternate signals are very attractive. Pocket pivot, Mobo breakout from a squeeze with a kahuna. Bongo is green. Only reason one would not buy at the close of the day is because of the upper tail. One could buy using intraday chart early in the day because the breakout signal came right at the open. So if we now look at the intraday chart, the breakout came right near the open and we have 10 minutes before the early range high form. So we have enough time. We would know from that time utilities was the only strong sector, only up sector, only strong sector. We could find these fundamentally strong stocks. We could take a long position right at this point. In fact, this is 10-minute chart. Let me change to 5-minute chart. We could take a long position right at this point when it closed decisively above early range high, put stop below early range low, and by the time price came to the pause line, more than risk distance was covered, so we could book at least partial profit. Using that intraday technique, precision entry technique, we could take a swing trade entry with very low risk and continue to hold the trade. I wouldn't buy the stock at the close of the day looking at the upper tail, but I already took an entry earlier, so I am having a long position in FE also. In FE and DTE, I am having a long position. Let's look at FE's fundamentals using the vital scorecard. They FEDT both are in same industry, electric utilities. Also strong fundamental, in this case it is undervalued. Some earnings growth not high, it's an utilities anyway. Revenue growth also improving, earnings growth also improving, and as you would expect from a utility stock, revenue is steady, earnings is also steady. You can see from the percentages here, steadily going up, and as I mentioned, some of these have more than 4% dividend yield. FE is one of them, more than 4% dividend yield. Earnings is nearby. In fact, all the 4 stocks I shared, earnings is nearby. This is earnings season, so they have decent dividend. They are conservative stocks in the sector that is doing best, and there is some basis for technical buy setup. So I had taken long position in FE and DTE on Friday. So in this market also I am able to buy some stocks, though I am shorting as well. And now if you look back, I have started shorting. If you go through my tweets or go through my forum posts or look at my YouTube videos, I have started shorting before others took notice that market is rolling over, and I booked profit in many of them. I did buy some stocks, but they are not at all stocks like STX, which is a tech stock. I bought stocks in utilities. This way, whatever be the market condition, using Q techniques, you are able to find low risk, high probability stocks, trades, long or short direction, combining fundamental technical industry strength. Uh, I'm at the 1 hour point. Once again, sorry about the muting in the middle. You may help me next time by putting a message on the chat box. It's really embarrassing to forget to unmute. In any case, thanks a lot once again. I look forward to seeing you in our next session, which will most likely be on Wednesday, 8 a.m. Eastern Standard Time. I'll announce the exact time and link on Twitter page, and you will get notification if you are following me on YouTube Trading Profitably channel. Have a wonderful weekend. Keep safe and keep trading profitably, as I always say, as I always show using these live examples. There is absolutely no reason not to do that. Thank you. Bye bye.